You did the work, you got paid, and now there's a folder on your laptop called Taxes that you have not opened since October. And the number rattling around in your head is that the IRS is going to take something like a third of everything you made. That's the belief. The data tells a different story. Per the IRS instructions for Schedule SE, self-employment tax is 15.3%, but it doesn't touch your gross. It applies to 92.35% of your net profit, after expenses, and then half of what you pay gets deducted right back off your income. So the real question isn't how much they take. It's whether you fill out the two forms in the right order, because doing them backwards is exactly how first-timers hand over money they never owed. Let's talk about what actually happens when you file as a freelancer for the first time. Start with the shape of the return, because this is the part nobody explains. You're not filing a business return. There's no separate freelancer tax form floating out there. If you're a sole proprietor, no LLC, or a single-member LLC that hasn't elected corporate treatment, your business income lands on Schedule C, which attaches to the same Form 1040 you've always filed. Schedule C spits out one number at the bottom, net profit. That number then does two jobs. It flows to Schedule 1, which feeds your 1040 and gets hit with ordinary income tax at whatever bracket you land in. And it flows to Schedule SE, which calculates self-employment tax, your Social Security and Medicare, both halves, because you're the employee and the employer now. That's the whole architecture. Schedule C, then Schedule SE, then Schedule 1, then the 1040. In that order, always, because Schedule SE can't run until Schedule C gives it a profit number, and Schedule 1 can't run until Schedule SE tells it how much of your SE tax is deductible. Software does this sequencing for you, but you should know why the pieces move that way, because when a number looks wrong, you'll know which form to go stare at. One threshold before we go further. The IRS says you file Schedule SE and owe self-employment tax once your net earnings from self-employment hit $400. $400, not $4,000. That's a low bar, and it hasn't moved in decades. Now, whether you're required to file a 1040 at all depends on your total income and filing status. A married freelancer with a W-2 spouse is in a completely different spot than a single person with one Upwork client. But if you cleared $400 in profit, the SE side is on. Now, gathering income, which is where a lot of first-timers quietly break the law without meaning to. You'll get 1099 NECs from clients who paid you $600 or more during the year. You might get a 1099K from Stripe or PayPal or a gig platform. And starting with the 2025 tax year, you'll get a lot fewer of those because the One Big Beautiful Bill Act, signed July 4, 2025, repealed the American Rescue Plan's $600 1099K threshold and restored the old rule, $20,000 and 200 transactions before a platform has to send you one. Here's what I want you to hear about that. Your reporting obligation did not change one bit. Not a comma. The threshold governs what the platform mails you and the IRS. It says nothing about what you owe. If you made $9,000 on a payment app and got zero paperwork, that $9,000 goes on line 1 of Schedule C, exactly the same as if a form had shown up. The IRS's own 1099K guidance is blunt about this. All income is reportable regardless of whether an information return was issued. So don't build your return around the forms in your mailbox. Build it from your bank. Open your business checking account on Mosayan. And if you don't have a separate one yet, that's the single highest value thing you can fix before next January. Because reconstructing a year of mixed personal and business transactions in March is genuinely miserable. Pull every deposit, total them. That total is your gross receipts. Then cross-check it against the 1099s you did receive. If the 1099 total is higher than your bank total, something's wrong. A client double-issued, or a platform reported gross before fees, which happens constantly with 1099Ks. Fix it before you file, not after. Expenses. This is where I get opinionated because just write it off is the most misunderstood phrase in freelancing, and it costs people real money in both directions. A write-off is not a coupon. Deducting a $1,000 laptop doesn't save you $1,000. It removes $1,000 from the income you're taxed on. If you're in the 22% federal bracket and paying 15.3% SE tax on that same dollar, the deduction saves you something in the neighborhood of $350. Real money, not free money. The standard, straight out of Section 162 of the tax code, is ordinary and necessary for your trade. Common in your line of work, helpful to it. Software subscriptions, professional insurance, contractor labor you paid out, a portion of your phone, business travel, courses that sharpen a skill you already sell. 2 deductions deserve their own moment because first-timers either skip them or blow them. Mileage. The standard rate for 2026 is 72.5 cents a mile. The IRS set that in Notice 2610. It was 70 cents for 2025, up from 67 cents in 2024. So if you're filing a 2025 return this spring, use 70. Client meetings, supply runs, driving to a shoot, all deductible. Your commute is not, because as a sole proprietor with a home office, your commute is basically walking to the kitchen. Drive 4,000 business miles at 72.5 cents, and that's $2,900 off your profit. You need a log. Date, miles, purpose. An app is fine, a notebook is fine, a reconstruction you invent in April is not. Home office. The simplified method is $5 per square foot, capped at 300 square feet, so $1,500 maximum. The space has to be used regularly and exclusively for business. The dining table where your family eats dinner doesn't count, and I know that's annoying. If you've got a genuine 10 by 12 room, that's 20 square feet, $600 under the simplified method. Compare that to the actual expense method, where you take the business use percentage of your rent, utilities, and renter's insurance. If your rent is high, actual expenses can crush the simplified number. Run both. Take the bigger one. Now schedule SE, which is the form that produces the sticker shock, and the form that's least complicated once you see the sequence. Take your Schedule C net profit, multiply by 92.35%. That haircut exists because employees don't pay Social Security tax on their employer's half, so the code approximates the same treatment for you. Multiply what's left by 15.3%. That's 12.4% Social Security plus 2.9% Medicare. Numbers. Say you netted $50,000. 92.35% of 50,000 is 46,000, 175. 15.3% of 46,175 is $7,065. That's your self-employment tax. And then the part first-timers miss. Half of it, $3,533, comes off as an adjustment on Schedule 1. You don't need to itemize to get it. It reduces your income tax base, not your SE tax that $7,065 is still due. But it's an automatic deduction that any decent software applies and that people filing by hand skip every single year. 2 ceilings worth knowing. The 12.4% Social Security piece stops at the wage base, $184,500 for 2026, up from $176,100 in 2025 per SSA. Above that, only the 2.9% Medicare continues, and an extra 0.9% additional Medicare tax kicks in over $200,000 single, $250,000 married filing jointly. Those 2 thresholds have never been indexed for inflation, which means more people drift into them every year. If you also have a W-2 job, your wages eat into that wage base first. The coordination happens on Schedule SE, and it's a real refund if your payroll already covered it. I focus on the financial side of freelance and gig work, and the question I get more than any other is about quarterly payments, usually from someone convinced they've already broken the law. They almost certainly haven't. The IRS rule is that estimated payments are required only if you expect to owe at least $1,000 after withholding and credits. Under that, you settle up at filing. And even above it, the safe harbor is generous. Pay the smaller of 90% of this year's tax or 100% of last year's total tax. 110% if your prior year AGI topped $150,000, and no underpayment penalty, no matter how much you end up owing in April. That prior year number is the one to use. It's a known quantity sitting on last year's return. Divide by 4, pay it on the 15th of April, June, September, and January. Done. And if last year you were a W-2 employee with a small tax bill, your prior year safe harbor is tiny. That's the freelancer's first-year gift and hardly anyone uses it. 2 more things before you file. The Section 199A Qualified Business Income Deduction. Up to 20% of your net business income off your taxable income on top of the standard deduction. It was scheduled to sunset after 2025, and the ABA made it permanent, which is the single best thing that happened to sole proprietors last year. Phase-outs apply at higher incomes and specified service businesses get limited, so your mileage varies by income level and what you do. But at $50,000 of profit, you're nowhere near those limits. And retirement, because this is my hill. Most freelancers overpay because they set up a solo 401k too late. A SEP IRA lets you put in up to 25% of net self-employment earnings, capped at the 2026 defined contribution limit of $72,000. A solo 401k gives you a $24,500 employee deferral for 2026, plus an employer piece under that same $72,000 ceiling, which at moderate income lets you shelter far more than a SEP. Here's the catch that costs people thousands. A SEP can be opened and funded up to your filing deadline, including extensions. But the solo 401k deferral has timing rules that generally require the plan to exist by December 31st. My take: if you netted more than about $40,000 this year, open the solo 401k before the year ends, even if you fund it later. Every March, someone tells me they'd have saved $5,000 in tax if they'd signed a plan document in December. Don't be that person. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If this cleared up even one thing you were dreading, subscribe. I put out a video like this every week, aimed squarely at people doing this without an HR department. And if there's a freelance tax question you've been quietly Googling at midnight, put it in the comments and I'll build a video around it. Next week, I'm running the 2027 freelancer contribution limits against 2026, so you know exactly what shifts before you set your savings rate. See you then.